Hello everyone, welcome to another update. My name is Chris, or you might know me as Beat the Markets on eToro. In this one, I wanted to talk about Acuity Brands' third quarter earnings. They released their earnings yesterday on the 29th. If you didn't know, Acuity Brands is a leading provider of innovative lighting products and solutions, and they offer a diverse portfolio that includes LED lighting, controls, and daylighting, amongst other things. Their products are designed to cater for a wide range of applications, from residential and commercial to industrial and infrastructure. The majority of Acuity's revenues come from their lighting products. This includes the sale of luminaires, lighting controls, components, lamps, and other related products. They have a strong presence in the North American market, which is their primary source of revenue. In terms of the release, Acuity reported earnings of $3.50 per share on revenue of $1 billion. This surpassed the consensus estimate of $3.35 per share, but did fall short on the revenue side with an estimate of $1.1 billion. Revenue fell by 5.7% compared to the same quarter a year ago. The company improved its operating profit margin by 80 basis points over the prior year, and its adjusted operating profit margin by 100 basis points. Acuity's lighting and lighting controls, otherwise known as ABL, saw a decrease in net sales by 6.7% compared to the prior year. However, they did manage to increase their operating profit margin by 110 basis points. On the other hand, the Intelligent Spaces Group, otherwise known as ISG, saw an increase in net sales by 12.9%, but experienced a decrease in operating profit. The company generated $471.5 million from operating activities for the first 9 months of fiscal 2023. That's an increase of $305.8 million compared to the prior year. This was primarily due to an improvement in working capital, which is basically the amount of money available to the company to fund its day-to-day operations. Furthermore, the company repurchased approximately 1.3 million shares of common stock for a total of $219 million. In the conference call then, Neil Ash, the CEO, mentioned that sales were impacted by both lead time normalization and the macro environment, and that was expected to continue also. Lead time normalization would suggest that they've been able to reduce the time it takes to fulfill customer orders. He said last year longer lead times and rising prices led to a surge in orders, resulting in a backlog. Since then, they've been steadily working through that backlog, and now it's returning to levels seen in a typical quarter. The Q&A session also highlighted that the company's order rates were stabilizing. However, they are not ready to predict when that will return back to normal sequential seasonality, which basically refers to the regular fluctuations observed through the year, where the company would experience recurring patterns in demand. They've improved the business since they targeted a margin of 42% and are focusing on growing its Intelligent Spaces Group. The company had a backlog due to longer lead times and a price increase environment, which they've been working through this year. The lead times for switch gears have not compressed and have been a bottleneck on many of their already funded projects. The company expects to continue with current trends in the fourth quarter. They're still focusing on the strategy. They're also focusing on the continued growth of Dischek and Atrius, if I pronounce them right, and the successful integration of KE2. The company's capital allocation priorities remain the same. They have invested in growth through R&D and CapEx, expanded their platform through acquisitions, and maintained their dividends, and created shareholder value with share repurchases. We didn't get any guidance, unfortunately, but the current consensus estimate for Acuity is to achieve an earnings per share of around $11.63 in 2023. If they achieve that, that would give them a forward P of 14. So that's all I have for you in this one. I plan on doing more of these, but recording these can be difficult sometimes, mainly due to the lack of a quiet recording environment and sometimes time constraints as well. So going forward, I might be using a feature on Descript that's called Overdub. Basically, I'm in the process of training this. It's a text-to-speech model trained on my own voice, which I might use if I want to give an update based on my prepared notes, but I don't have the current opportunity. It might enable me to just kick out more updates more regularly. Otherwise, I would record one in person as I am now. So thank you for listening. I hope you got some value out of this, and see you again in the next one.